Okay, hello everyone. Welcome. Mike Boutros here with you guys. Today is July 1st, Thursday, or Wednesday rather, 2015, day ahead of the highly anticipated non-farm payroll print. Want to welcome everyone to the room here. Good morning to GS, Eileen, Permendra, Steven, Jay Jackson. Great to see you. Great to see you guys in the room as always. So, right off the bat, it's the new start of a month, the new start of a quarter. We're typically extremely light on intraday trading. It's very highly unlikely, to be quite frank with you guys, that I'll be taking anything heading into the NFP print. The NFP print in and of itself may present some opportunities. We'll cover that live here tomorrow morning. But as it stands right now, I'm very cautious as these front end quarter month flows can really skew intraday trading. So we'll go over the featured setups on the intraday charts. We'll go over the SB update from last night. And any questions and trade setups that you guys have, feel free to throw them on the message board. There is a lot of things that are coming into very interesting areas as we open the month. But I just want to caution you again on intraday trading can sometimes be very tricky with these open quarter monthly flows. Add to that, it is a shortened holiday week here in New York. Obviously, markets will be closed on Friday in observance of the 4th of July, which is on Saturday. U.S. equity markets and bond markets will also be closed on Friday. So um, keep that in mind. Yeah, Eileen, seeing that the sound is kind of low. You can see that the meter is running a little low. Is that better, guys? Do let me know if there's any issues with the sound. I'll try to speak up a little bit, but let me know if that works. So let's jump right into the things. Start off the session. Obviously, guys, the dollar is trading weaker against all of its major counterparts. You can see that gauge on the top right-hand corner of your screen there. Biggest loser on the session is the Swiss franc, followed by the euro, down 0.62%. Again, dollar index now making a run through that 11,887, 11,880 level. We've been talking about that region for quite some time. It's been a major pivot. We gapped above it on the Sunday open, came right back below it, closed below Friday's low, and here we are with another attempt. It's going to have to be a close above, guys, to really validate a breakout. So even if this pushes through today on an extended session here in the United States, I'm still not going to be too keen on jumping on board just yet. Okay, so keep in mind, like I said, we have non-farm payrolls on Friday. Market expectations are for still a weaker print than we got last month. Expectations at this point have shifted to 230,000. Unemployment widely expected to drop from 5.5 to 5.4%. The other thing that we'll be obviously taking a look at is the average hourly earnings. Okay, here's what the expectations are. So ADP came out at 237 earlier today, beating a mark of 218. Sometimes we'll see expectations get bumped up on NFPs on that, but just a caution there. I've done a lot of research back at how correlated the ADP is with NFPs, and certainly they will tend to move in tandem together, broadly speaking. But the ADP report is notorious for missing larger swings in NFPs. So on a really weak read or a really strong read, ADP typically will smooth that out, and you won't really see that presented in that figure. So we'll still focus on the NFP number here. The other thing I want to point out is the participation rate. Okay, labor force participation 62.9, 62.8 was the lowest that we've seen since the 1970s. Okay, so on that front, 62.9, we got uptick last month. We'll continue to see if that moves higher. Keep in mind that when the labor force participation contracts, that'll tend to put artificial downward pressure, um, or excuse me, artificial downward pressure on the broader unemployment rate. If we see this uptick to 63, okay, 63.1, don't be too surprised if you see this hold at 5.5 or even uptick, and that's okay, because the labor force participation has been an ongoing concern that Yellen has continued to suggest. And as the labor force contracts, as a smaller, fewer amount of people that are included in that figure, the unemployment rate will be artificially inflated. So keep that in mind. Jay Jackson says NFP tomorrow, Thursday. Yeah, Jay. So the NFPs will come out on Thursday this week. Again, like I said, markets will be closed on Friday, so that print will be coming out earlier, and that'll be tomorrow morning at 8:30 Eastern. Guys, before I move on, can I just get confirmation that the sound is working all right? It looks like the gauge is a little bit low here. Just want to make sure you guys can hear me all right. Sound is okay for me. Mario says that's better. Still low for Kyle. Okay, I'll try to speak up here. But better if you take off the bucket. GS, I'm assuming that means it's not loud enough. Okay, I'll see if I can adjust that for tomorrow. Per manager says it's okay for now. All right. So, give me one moment. Should be better at this point. All right. So, moving along. It sounds louder now, says Kyle. All right, thanks for that, Kyle. So let's move on. I do want to go over the radar charts real quick. The euro dollar, I haven't really touched this. Remember, the invalidation level or the level we're looking to get long or maintain the long bias, let's say that, um, was right here at 111.50. Okay, 111.50 was a really nice pivot in price. It was the lowest for the previous week, and it would necessitate a break below that median line. Well, we broke below that yesterday in U.S. trade. The opening range high for Asia Pac was right at 1150. The invalidation level, or the level that would shift our focus to start selling rallies, is down here at 110.50. So we still haven't quite made it there. Here's what the euro dollar looks like right now. Okay, there's that 110.50 level. It's a 618 of the range off last month's low. It's also the stretch lows that you made for the initial May opening range. You can see it right there. That's 110.65. And this is the region of near-term support. You have the median line off the highs there. You have the 100-day moving average in there. And again, both of those technical features. So on the intraday scalp, here's what it looked like. It was a slow mutter down. We did look for that 618 off the weekly range. 110.76 looks like it's catching support. One thing I noted in that piece yesterday on the euro was that the momentum continues to hold the 40 threshold, and certainly that's still the case here. You did dribble a little bit below when you're trading below it right now, but if you look at the momentum signature on whole, we had a couple of dips back here that probe into that region. Long story short, you need to get above 1150 again to get that conviction and press the longs. If we break sub 1050, you look for a little bit more of a precipitous drop down to 110. 109.50 is going to be the lows that we made for the week, and also that 786 retracement. So that's why I put it on the radar last night. I didn't keep it on the intraday update specifically. I think you need to wait this one out, guys. Obviously, there's continued headlines coming out of Greece and yada yada. Now they might reach a deal, but Merkel doesn't want to even discuss it until we get the referendum out of the way, which will be on Sunday. On a side note, if you're trading euro, watch for that Sunday open, okay? Especially on the back of the election or the referendum, rather, in Greece. The market open at 6 o'clock could be pretty volatile, so make sure you keep that in mind as you head into the open of next week. But for the euro, nothing's been invalidated. So as far as the broader upside focus that we've been working on, you're still within the confines of, or you're still looking at this trend line right here, which is just a basic slope line connecting the, where did I get that from? Okay, there was some, I'm not sure where I got this from, so I'm going to get rid of this. But long story short, there's a 786. There's that former trendline resistance that we talked about yesterday, right? And that's just a mirror of the slope from the 2010 lows there, or from the June 2014 lows. Okay, if you mirror that to the highs that you made in December, again, that's been a very nice pivot. Caught that high early in May, caught that high early in June, and here we are catching the lows again. Or at least on the gap open for Sunday. So watch for this near-term support. A downside break shifts the focus to the downside. Momentum trigger did give out, but didn't really see much follow through. So I'm not going to stress that trigger at all right now. And we'll see if we can find some basing here for the euro dollar. All right, so still not giving up on the long side per se. You could get another push down into that median line, into the 1040, 1050 level here, but that's going to be our last sort of area of which we'd start to look for support. If that doesn't hold, we're going to abandon trying to look for the long side. You haven't really gotten many long triggers anyway, so make sure you stay prudent on that. Euro dollar in the 5-minute looks like this. Okay, here's a trigger that gave out earlier, right ahead of the webinar earlier just now. Again, it was not that compelling of a trade. The stop would have had to been, basically above that swing high, but that's not even a session or major high, so there's not really much to put your stop against on that drop. And again, 1150 is right around the corner, or 1050 rather, and we'll see if we can get a drop into that region, offer some more basing here for the euro. Any questions on this before we move forward? I do want to jump into the dollar yen, which we took here on the mic on the webinar yesterday. Mike, you still have a short bias for dollar yen, Raj says. You read my mind, man. So yeah, listen, I do. Hasn't changed. Yesterday, if you guys recall, we were in a short in the webinar here for the dollar yen. It was a really compelling rally right into this median line that offered a really nice divergence into a trigger break on the 5-minute. I went over that yesterday in the webinar. The short was taking. Target was 122. We got that a couple hours into U.S. trade. To be fair, I actually got out at 121, 122.10 on this initial dip. The stops were brought down to break even. And then on this last run into 122, I just went and booked the entire trade. So here's the rebound. You're getting a little bit more of a topside pop. I do think that you could see this thing going to 123.20, which is, again, those pivots, a really nice pivot region for the last couple of weeks in dollar yen. And honestly, to be quite frank, Raj, I wouldn't even be surprised if this runs for a median line tag here before it turns over. The dollar's seen some strength. Broadly speaking, looking for shorts below this region, kind of neutral here, and this is the invalidation level. So I'll be a little bit more cautious if we break this high. I want a pretty compelling trigger to try to short that, but largely speaking, yeah, nothing's really changed. Always keep your eye on the daily charts, guys. Always keep your eye on the daily charts. And the daily chart, I think, for dollar yen has been one of the most compelling out of the dollar crosses. Okay, so the sheer, reaction and the sheer fashion in which this is responding to these major key levels is very telling in my opinion. So 122.33, 122.36, the level we highlighted again earlier in the month. A really nice confluence of Fibonacci levels. At this point now, you have the median line again now confluencing on that region. So, not too surprised to see a little bit of a bounce here. Again, if you bring this into a close basis and look at a line chart, you're still finding that support barrier is pretty clutch. Despite the fact that you got some spike wicks down there, at the end of the day, we haven't been able to close below that region. So, yeah, you could see a little bit more of a rally here in 123.23 that we highlighted on the intraday chart is exactly where this median line is, and this is simply a parallel of the operative structure we've been off from the low of the year. So if you take that same slope, that pitchfork I'm highlighting here, slide it to that high that you made on the 8th of May, you can see really nice pivots, right? Catching the highs early on that gap on Sunday, and again, that comes in about 123.23, which is exactly what we have highlighted right here. So yes, I am looking for short triggers. I noted yesterday in the intraday update. By the way, here's the link for everyone if you haven't seen that yet. If you take a look at the intraday update, rather, that support trigger from last night is still in play. Okay, and that's been sort of what we've been waiting for to see this thing break. Okay, so that support trigger is still in play from last night. If you see some resistance here at 123.21, again, that low that we made, look for that support trigger to give out, and we'll look to reassert the short side here. As far as the gap is concerned, I got a couple of questions last night with people asking me about the gap. Look, the gap trade can be very, very profitable and can be very a compelling position. The only thing I don't like is people trying to target the gap in and of itself as soon as it's made. Gaps, guys, can take weeks, months to fill. There's nothing that says the market needs to come back and fill the gap right away. It's a compelling target. If we break above 123.20, again, that would be actually a nice region where you expect to see that upper median line parallel possibly stretch into that gap fill, right, which would take a move into 123.78. But at the end of the day, I'd just caution you on making that your compelling case to press the trade. So take that for what it's worth, but game plan still remains, and as long as we hold within the confines of this downside formation, I will favor the downside for dollar yen. Questions? Raj says, I am looking to add to the short. Where would be a good place for that? We have a swing trade on this. Right, and Raj, I just want to take one more second. I've said this here in the webinars before. I want to caution you guys on trying to integrate the strategies. If you have two separate accounts, it's the best way to do it. You take one account for the longer term swing trades, and then you have another account for intraday trading. Sometimes you can take a position against your longer term stance for an intraday scalp, but I want to caution you on trying to mesh the two together, because what will happen, Raj, is that you'll start to alter the risk to reward ratio and can impact the broader performance of the strategy. So I just want to keep that in mind. That being said, like I said, nothing's going to change, Raj. The same exact levels, whether you're looking to add or whether you're looking to take another intraday scalp. That's going to be initial target right here at 123.20. We'll see if we can find some resistance. And then again, the upper median line parallel. Those are the two areas of which I would look for short exposure. Does that help, Raj? I hope that makes sense. Okay. Raj says yes. All right. Thanks for that, Raj. Appreciate it. And also, one other thing that you want to keep in mind is that we're still looking at the same levels, guys. So the analysis is still the same. It's just different takes on how to actually trade it. So if we look at the swing trades, the stop is actually at 23.95, which is essentially that 50% retracement and this region of invalidation. So where the stop is sort of exactly where we're looking for the invalidation, the scalp region, near-term resistance. Like I said, that pivot that we made at 123.20. All right. Do you see any triggers on the 5-minute, Steven? Let's take a look. Dollar yen. Oh, shucks. We probably should have looked at this a little earlier. There's a trigger that just gave out, guys. 3-point trigger to the downside. Divergence into a trigger break. 9 times out of 10, I will favor that position. The only concern is that the timing of which you are in is 8:45. So any stops that you put on this trade would need to be against that Sunday open swing. I'd probably just put it above 123.20. So kind of opens up the stop a little past our objective profit target, which was bigger yesterday. I think we were looking at about 27, 28 pips, which we locked in on that drop into 122 again. But it's just the stop here that's a little bit of a concern. But there is that trigger that just gave out, Stephen. That was Bill. Also, thanks for your help. You are excellent. Of course, you know Bill already. Hey, Bill. Always great to see you, man. I appreciate that. But looking, yeah, Steven, you got it. Dollar yen. He actually noted it earlier. Sorry, I missed that comment. He says divergence into highs, but they're above 70. That's true. And this is something I've said in the webinars here as well. These divergence signals, when above 70 or below 30, are typically going to be your weakest signals, okay? The actual, or over the years, what I found is that the closer the divergent points are to 50, the stronger the signal, the more compelling the case. So I completely agree with you, Stephen. Other than that, really the timing is sort of the issue for me. But this is going to be an ideal scenario. A trigger divergence into a trigger break is exactly what put us into the trade yesterday. And, it's always going to be your best trigger to take the position. So we'll keep an eye on this webinar. We'll see if we can get another pop-up in the highs. If that divergence holds or you get another divergent reference point and then a break again, it could be an opportunity to get short. But keep in mind, again, guys, it's the open of the month. It's the open of the quarter. And I tend to be very, very, very cautious here. So anything I do take today will typically be a quarter, if not a third maximum of the leverage size I typically take. All right. JT says, I know it's not your favorite pair, but can we look at the dollar Swiss near term? JT, really? For you, man, I'll do it. But I'm not, I don't really mess with Swissy very often. Give me a second, JT. Let's just get through some of these setups, and I'll be sure to take a look for you. Okay, so any other questions on dollar yen before we move off? Still my favorite scalp. Still is the first one on the scalp update from last night. The next trade was CAD yen. I put a piece out on Daily FX yesterday. Guys, I'll always link that whenever I talk about that report. So if you're not on the mailing list on Daily FX, there was that piece. And obviously, we'll give you a little bit more color on the charts that we offer on SB, but the accompanying video sometimes can be a nice little description for the setup as well. So here's what we're looking at with CAD yen. Okay, the support structure at 97.54 is what's in focus here, and you have the median line, the lower median line parallel of the descending structure into that region, and we already defended 99, 98, 90 as resistance yesterday after we broke below. So we are looking lower, but you're at near-term support. You had some minor divergence in momentum, and he said, you know what, this thing could probably give us a rally back into 99, but this is going to be the near-term invalidation level for the bias. Here's what CAD yen looks like on the daily. Okay, so the premise of the trade again was the failure to break above that 618. We made a gap lower at the open on Sunday. We failed to fill that gap, and in fact, the high was almost the exact low you made on Friday. And then this thing slammed down and closed below the median line and this Fibonacci confluence at 98.90, 98.80. Okay, so the drop yesterday came into a major key support. Again, the confluence of the lower median line parallel, a 38.2 off the lows. And momentum yesterday, if you look at the daily chart, was sitting right at 40. I know you can't see it through that shade there, but right at 40. So you could see a little bit more of a pop here. Again, this is our near-term bearish invalidation level. So as long as price holds below this region, we are looking for short triggers on the rally. And now that we have a sort of picture here of what we're looking at on the daily chart, here's what it looks like on the 30-minute. Yeah, Eileen, thanks for the heads up. Eileen says there's some interference on the sound. Guys, keep me updated if that becomes an issue. I think it might be on your end, Eileen, because I'm getting comments here that the sound is okay. So keep me updated on that. So here it is. You know, you saw a little bit of a bounce, a little bit of a rebound off of that region. We're still looking for short triggers. There is one that looks like it's primed here, right around there. It looks like it's being tested right now. And let me bring this into a 5-minute chart. Okay, and this is the other thing you're going to want to see. So a lot of the times, hey Mark, thanks for that. I think sound is all right there. So a lot of the times, guys, when you're looking to intraday trade as well, you want to sort of take a quick look at the broader momentum signature on the 5-minute even. And again, ever since the low we made, right? We got divergence into the low, cracked 60. Ever since that 40 cracked to the upside in momentum, every pullback support at 40. Break above 60, support at 40. Break above 60, support at 40. Break above 70. This is going to want to change. We're going to want to see that dynamic change for this to turn over. So as it stands right now, I'm not really primed to do anything. Even if it breaks 40 to the downside, you know, a stop way up at 98.24 is going to be too open for that type of scalp. So if it breaks 40 to the downside, we'll look to sell a rebound in price. But broadly speaking, you want to be cautious until you clear this major key support. And then you have a 100 pip downside, 110 pip downside drop into the 50, which will be a little bit more of a critical barrier. It's a 50% retracement off the highs, off the low rather. It's the high that you made for February. Decent pivot in price, right? And then you have the lower median line parallel there, and also this longer dated parallel, which we don't really have enough conviction necessarily to suggest it's going to be a major pivot, but it also comes within the confines of that highlighted region. So the levels are pretty clear to open up the month. Bear sub 98.90, the 99 handle, break of the lows, you're looking for a drop into 96.40. Any questions on the CAD yen? Hey, Bill says, please, can you talk about why you're using 20 periods? I thought you said they use 14. Again, Bill, I use them. If you were here, I don't know how many weeks ago we were talking about this as well. So I actually, it's not a science, guys. It's more of an art form. You can move this into a 14, and this is literally what I do, guys. I see what gives us the better triggers. Okay, sometimes the 20 will smooth out the triggers a little bit. Sometimes if you bring it into a 14, it's going to be a lot more jerky. You'll see a lot more oscillations. Remember, the smaller you make the number, the more, um, you know, reactive the signal line will be. But if you look at this and you bring it into a 14, it didn't really give us all that clean holds that we were looking for, right? So this was holding on the 20 period, that broke there. This looks like it's breaking here below 40. I don't know if that's the real deal. If you bring this into a 20, sometimes it'll smooth it out a little bit, but it'll also give us a little bit more clarity as far as trying to use the oscillator to gauge momentum. So literally, Bill, I will bring up a 14, I'll bring up a 20, and whatever one's giving the better signals, the better holds at 40 and 60 and so forth, I'll use that. When markets are a little bit more volatile, I'll default to the 20. Okay, the 14 will work a little bit better in range-bound markets. But when you're seeing breaks, gaps, larger swings in price, I'll tend to go to the 20 to smooth out the line a little bit. So, for example, on a gap like this, that drop that we saw, if you bring it back into the 14, it's going to have a much bigger impact on price, right? And that's why you're seeing this sub 40 here, when really we're at support. So if I bring it back into the 20, price is at support, momentum at 40, looks a little bit better, right? All right, cool. Bill says, okay, got it. Thanks. You're welcome, sir. All right, so that is the CAD yen. Those are the two, again, that I highlighted yesterday. It's going to be kind of light on the intraday page, guys, until we get deeper into the month. Again, it's sort of my time to do more analysis necessarily than active trading. So going back to the intraday, just a couple of other radar charts before we jump into your question. The Aussie key is in focus as well. That broke a major level yesterday. I'm kind of kicking myself because I was watching this for a while, but we obviously missed the breakout. 113.02 into 112.78. That's basically the high day close for 2014 and the stretch high that you made for the year. Also, you had the median line there off the lows, which was right into that region. We broke through. That's near-term support. Near-term resistance is 114.20. So it's not necessarily a scalp per se, but definitely looking for this thing to stretch into a new high and possibly offer a nice short. Bring your attention to a couple of things. You got this trigger, or momentum trigger, that dates back to the lows for the year. Here's the 2015 open. B, sorry about that, let me adjust that. B, you're seeing that momentum's holding the same highs all through this rally. Higher high, higher high, higher high, all equal highs in momentum. So I'm really hard pressed to jump on any type of long exposure. Obviously, yesterday was a beautiful opportunity with a break of the initial weekly opening range. But at this point, I think that you're at risk. You're coming into that 100% extension off the lows. You're coming into that trend line or slope line that comes off the highs. By the way, guys, this operative slope has been ridiculous. I'm not sure if I showed you this yesterday. Support, 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 break, resistance, 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 break, real low tolerance. When the market comes here, it doesn't spend much time off of these levels. And if you mirror that same slope, you'll see that it has offered support and resistance textbook in price, right? Even on this pivot here, break. Nice reaction. So that same slope comes into play just above that 114.20 barrier, and that's basically right shy of 115, 114.90. So that's the focus here near term for the Aussie key. On the intraday, again, there's another formation near term that we're holding off of the lows here, which has us near term at resistance. But again, we haven't seen these highs in quite some time, so trying to find scalp targets above here will be tough. Let me add that 114.20. And the 114.90 is going to be that longer term trend line. So those are sort of some near term targets for you. Again, the ATR here on a daily basis is only about 109 pips, or 105 pips now. So again, the scalp range is going to be kind of tight, 27 pips per scalp. So that's another one that's on the radar. Don't necessarily have a play ready for it yet. You did get some divergence into the highs. You did get a trigger break off of the weekly low rather in momentum, but you're not really seeing much follow through. And again, I'll bring your attention to the time of month it is. These types of plays not really going to be something I'm interested in to open up the quarter. The last chart that's highlighted on there was, excuse me, Sterling Aus, and that's coming into an interesting area of support too to start the month. So here is sterling versus Australian dollar on the daily. And the only thing I wanted to highlight on this with that yesterday was the near-term support that we were at 202.70. You're basically looking at a basic 236, which isn't all that compelling. But You had that sliding parallel, which has offered a really nice pivot in price all the way up, and the current median line off the high right there. Okay, so look for near-term resistance at 204.74. That's actually the high day close. So the day the high was made here, the close of the session coincides pretty nicely with this region just under the upper median line parallel. So I wouldn't be surprised to see a little bit more upside, but broadly speaking, with the divergence you're getting in momentum, right? Higher high, higher high, higher high. Remember, when we're looking at the momentum oscillator, we're only taking into account the close. Doesn't matter what the spikes you're doing. So higher high, higher high, higher high. Equal highs on those first two stabs, and then a lower high. So momentum trigger is pending and waiting to go. A former resistance trigger also pending and waiting to go. A downside break below 202.70 with a move below this region momentum. I think you get a nice drop into key support, and that's basically just above the two figure. Around 200.20, 200.80 is going to be the larger range you're looking for. So again, another compelling trade to open the month. We'll be looking for this focus region here to give us a little bit more conviction on near-term directional bias. Longer term, it's an uptrend, plain and simple. Even from the start of the year, if you just look at the momentum signature alone, objectively, forget what Michael Boutros is saying, just looking at it from the September rally, every pullback in momentum, or every rally rather, has broken 60, hold at 40, broken 60, hold at 40, keep looking higher, break at 60, hold at 40, keep looking higher. Right now you're getting those divergent signals again into the highs. You could see a little bit of a drop. Scalps will be looking to play that drop. Medium-term players, longer-term players, they'll be looking for that drop to offer some nice long exposure. All right, so any questions on any of the highlighted setups that were featured either on the update or the intraday page yesterday, please do let me know. I do want to bring your attention to the SPX today. We're seeing a rally in stocks. This was the radar chart that we talked about yesterday, being at major key support confluence. Guess what? That charged a pretty nice rebound, and here's the SPX in today's trade. All right, so you saw that rebound come right into that 2088 level that we highlighted yesterday. Again, the median line parallel, and that 2088 level is actually the high day. Yes, it is the high day close. Okay, so the day the high was made, the close is right there. Nice area of resistance. And one other thing I'll point out to you is this. Since we started the year, okay, the momentum signature for the SPX has been a 40-60 range. 40, 60, 40, 60, 40, 60, 40, 60, right? And a break below 40 would be a pretty big deal as far as what we're looking at in price action. Here's the last time we broke 40 in momentum on the SPX. Okay, you saw a drop from 1940 right into the lows for the month, and that was right around 1822, over 100 handles to the downside. So keep that in mind. A downside break below 40 momentum and a push through this key support, this thing could get really ugly. You have a soft target, which you might find some rebound at 2037. That's just the 6.8 of the yearly range. But essentially, there's really not much on tap until, the close lows for the year, somewhere around 1990. But more importantly, the 50% of the rally off that same low is about 1978. And that's actually pretty darn close to the year stretch low that we made. So keep that in mind. Nice range here to open up the month for the SPX, right above key support and near-term resistance at 2088. Any questions on the SPX? Okay, let's jump into your questions now, guys. I see some pairs that you guys are looking at. Let's take a quick look. Bill says, can you please talk about Dollar Cad and Kiwi Cad? You got it. Let's start off with Dollar Cad. So the breakout materialized, and the short exposure that we were looking for never gave us any triggers. We couldn't find any resistance. This thing plowed right through since the start of the week. This break put us neutral. This break or closed yesterday above this region, put us constructive. So here's what the intraday chart looks like. First of all, the high day close for the year is the next target to the upside, and that comes in at 25.59. Okay, 25.60. That's the high day close. Offered exact resistance on the June opening range. That's the next target to the upside in the near term. I do want to see what this extension looks like. Bear with me one sec, guys. Okay. Okay, so look for that near-term resistance, like I said, right around the monthly highs. A break above that, you're looking for the 764 retracement from the decline off the yearly high, and that comes in higher at 126.18. Here's what the scalp looks like for the dollar CAD. So this was the operative one that we were looking at yesterday. This was the operative slope that we're looking at off the lows. And it held really well as resistance last week. The initial support here kind of slid through, but we held that Friday low. This was the original resistance that we were looking at. We were talking in the webinar yesterday for possibly looking at or looking for some resistance, right? The upper median line parallel was there. We also had the 764 retracement right at the highs. Well, we plowed right through it. Okay, so now, again, like I said, 2015 high day close comes into view first. 122.60, 122.59. You want to maintain a constructive outlook on the pair while above this region here. So basically yesterday's lows, or the lows they made in overnight trade, rather in Asia Pac, and that former upper median line parallel. Okay, so this is where you look for initial support. Top side objectives, 122.60, 126.18. Don't forget, let me take a step back. From the fundamental side, just to discuss it real quick on the dollar CAD, keep in mind a couple of things. We did get those weaker than expected GDP numbers. And in fact, if you look at the overnight credit, or if you look at interest rate expectations, the markets are actually pricing in a 25 basis point cut, okay, moving forward. So if the expectations still need to be adjusted to offer, or to price in, rather, a lower rate from the Bank of Canada, shouldn't be too surprising that we continue to see a little bit more CAD weakness in the near term. On the 5 minutes, even on the 5 minute, looks pretty constructed off the weekly low there, or off the low that we made in Asia Pac, excuse me. Here's the Sydney Open, here's the Tokyo Open. That low we made really held 40 again as support. Let's see if on this one, maybe the 14 will be better. Yeah, keep it smoothed out there. And just off the session low, there's another one. So wouldn't necessarily prompt short exposure, but if you see these trend lines give out, or you see these triggers give out, I would be looking to get off any longs that I'm holding. Again, I'm getting a pretty compelling signal to get me on the short side of this to open up the quarter. Look to see if that high day close offers any resistance near term for the dollar CAD. Take a gander real quick on the dollar yen. Okay, so see that trigger didn't actually materialize. So who was saying that earlier? I think it was JT, with the fact that the levels were above 70. Oh, that was Steven. The divergence above 70. So not the most compelling case. It could still pan out, but on a trade like this, you'll want to see that former trigger that gave you the initial signal hold as resistance. So still could pan out, but we'd rather much be closer to that 23.20 level to put that stop. I think you probably get another push higher. All right, so Bill, that's the dollar CAD. I hope that offers some clarity. Let me know if you have any specific questions on the dollar CAD before I move to Kiwi CAD. But this is the initial focus right now. And again, objectively, if we break this level, it's going to be a break of the previous month's highs. So this thing loves to find the range. Once it breaks those multi-month lows or multi-month highs, typically you'll get a move. We'll have to see if that holds at 125.60. Hey, Bill, you're more than welcome. As far as Kiwi CAD's concerned, Bill, I haven't actually looked at it. Let's take a gander here. I don't have an intraday chart for it, but let's see where we are. Yeah, not really a play there either. So here's what I'd say. 83.50, the 764 retracement. We just missed it on that stretch lower that we made yesterday. I'm not sure what way you're looking to attack this one, Bill, but for me, I'd either be looking for a rally into this region for a pivot. So either be a really great short exposure if you get a nice trigger up there, or if it plows through, look for a much steeper recovery. I don't necessarily want to be on the long side of the Kiwi just yet. We'll take a look at Kiwi Dollar in just a moment. That made a move last night as well. There was some weaker China data that came out that made the Aussie and Kiwi actually move. It was interesting. But as far as this is concerned, um, I'll also note the ongoing divergence in momentum. So price action, lower low, lower low, lower low, lower low, slightly higher low, and then there's a higher low right there. Again, not the most compelling case because you're below 30, but the trigger break, which looks like it's panning out here, not really the most telling move either. We've actually held 40 resistance since the start of the month, and that's telling too. So a 40 break in momentum and a move surpassing this region is what I would need to see to get more constructive. Like I said, that said, this would be a nice area for some short exposure on Kiwi CAD. Tough pair right now. Tough pair, Bill, because you're seeing that the Kiwi has been sort of on the weaker approach for a while, and so is the CAD recently. So I'm not surprised to see this chop action back and forth. Bill says, okay. All right. Aussie Cad, if possible, take a look for me on Aussie Cad. Thank you, says Permendra. Permendra, always good to see you in the room, sir. Aussie Cad looks like this. I was actually talking with Jamie about this yesterday. For the Aussie Cad, there's a couple of things that could be in play. Longer term, if you look at the charts that he's posted there on the swing trade, I think he charted something last night. We put a post out last night. But basically, there's some trendline resistance that we're looking at near term coming into play. Also, there's this. I think this was it. Or it could have been this, actually. Yeah, there it is. So this median line here off the lows is probably what I'd be looking at as well for resistance. You got that median line catching. More importantly, you got a 200-day moving average, which I'm not really big on moving average trading, guys, but in general, it's kind of foolish not to pay attention to one that has offered so many pivots in price. I'll bring your attention to the lows we made in July of last year. Just off that, the pivot gap that we didn't fill until this year. So here's an example of a gap that doesn't fill for 5 months, which is why you want to be cautious about trying to aggressively fill those gaps. But long story short, that 200-day moving average comes just above the median line here. And the high day close for May. So after the high that we made for the year, the low, you look for the next high beyond that is right here. And the close of that session comes right in, almost dead on with that 200-day moving average. All right. So region of near-term resistance here for Aussie Cad. Also keep in mind that this week is going to constitute an outside week. Okay, it's an outside reversal week at support. So adds all the more significance, guys, to a break above this region, especially it being the high day close. So I'm definitely going to be watching this if you see a breakout to the upside. Again, if the CAD weakness persists with what the Aussie's doing, this would be a nice play. But I would bring your attention to these longer-term technical factors can be very, very telling. Outside reversal day at support is definitely something I'm watching, especially with the weekly momentum defending 40 yet again. So it could be in the works for something much larger here on the daily chart. If we do see this start to break near term, you're at resistance. You'd actually be looking for a short right here. Let's see what it looks like on the 30-minute. Oh. Sorry for the silence there, guys. Just going on the fly here and seeing if there's anything that sort of looks pretty compelling. Looks pretty decent there. Looks pretty decent. So near term, again, this will be your near-term support structure. Specifically with a break below 40, if you make it below this region, that's going to be a nice recovery. And in that scenario, you would look at a basic retracement to find those downside targets. Wow, even better. 236 lines up perfectly with that low from yesterday. Not bad. Actually, I'm going to leave all these levels on there. Just get rid of the high and low. These are going to be your major key thresholds you want to look at if this thing does finally give us the correction. I'll tell you one thing. You're getting some really nice divergence into the highs. I always say when both the divergent signals are on the opposite side of the extreme, this is actually a decent signal. When both of the divergent signals are above 70 or both below, that's not a strong signal. But one above and one below actually tends to work out pretty well. So this is the key structure you need to clear, I think, to get a nice downside move here in Aussie Cad. Broadly speaking, though, this is the near-term bearish invalidation level any way you look at it. A break above this and this thing could really make a rally. Near term, almost made a perfect tag of it. So that's my take on it. I think it might be primed for a pullback. That's the level you need to clear. A breach above that resistance, like I said, probably going to see some serious upside. So to start the week, to start the month, to start the quarter, this is going to be the focus margin or the focus range you're looking at, 96 into 96.60, 96.70. All right, Permendra, does that help? Any specific questions here in Aussie Cad before we move on? Thank you very much, Michael. You're more than welcome, Permendra. So we'll take a quick look at the Aussie and the Kiwi, and then we'll wrap things up, guys. If you have any other specific questions, please feel free to throw them on the message board. But here's what we're looking at with those two pairs. So been out of focus for a while with the Aussie. As you can see, the daily chart has granted us proper justification to do so, in my opinion. We just can't seem to make it out of this bloody trend line. And, every time we try, we had a trial here once earlier in the month on the 17th, plowed through. looked like the reversal trade, came right back. Again, yesterday we tried to probe through. Again today, we got a nice spike into 77.37, almost 77.40 before coming right back lower. We still haven't closed really too far out of this trend line, guys. And if you bring this into a close, like I said, you can see almost a perfect tag there. Yeah, fine, a couple of dribbles there. Markets aren't static. And then you have today, which was testing this region again. I don't want to touch this thing near term. I really don't. I think you get some really clear definitive bias moving forward. We've been in contraction for some time. The initial opening range that we set forth on just the first 3 days of trade is where we've been the entire month, guys, literally. So momentum hasn't offered anything either, still below 50, still above 40. That trend line won't even give out for a trigger on the upside. So, I'm going to let this thing pan out. We haven't talked about this on the intraday page for the last 2 days just because of where we are there. And, I'm going to look for a little bit more conviction on that before I start to take a little bit more of a definitive bias. Here's what it looks like on the intraday. It's been holding this median line structure off the high pretty decent. Yet last night, you almost got a perfect tag into that region on some divergence, but there wasn't really a compelling trigger here to try to take this short. So try to fight the uptrend all week. Would have panned out pretty well. Let's see if there's a 5-minute trigger pending here from now. Yeah, you had some divergence even on the 5-minute chart. Price action making a higher high on a closed basis. Equal highs in momentum. Remember, it's not necessary that you have one reference point lower than the other in momentum. All you're looking for is that the oscillator is not confirming an extreme in price. So as price presses a new high, and this holds the same high, that's still divergence. Okay, so I guess the best trigger you would have had here last night off the low in price would have been something like this. With a stop against the Sydney highs. That actually would have panned out pretty well. From here, high in price. Okay, these levels I'd be working with near term. Support 76.60 at this point, and 76.40 should be something a little bit more critical down here. But I keep your eye on the daily chart, guys. This is really what we need to clear out of this congestion zone to get this going. And again, the risk, I'm going to say this very clearly so everyone's on the same page. The risk is to the upside while above 75.90. That's all I can say. I might not necessarily take any long scalps unless we get some more conviction heading into the end of the week. Maybe non-farm payrolls offers a spike into this low. But you know what 75.90 represents, guys? The 2015 low day close. There it is on the 2nd of April. On a close basis, despite all these wicks, never cleared it. 2 solid bounces back in April. Okay, and even on a spike basis, couldn't get there early June, couldn't get there on the 5th on this decline, and yesterday's move, or the Sunday gap, probed right into it. The low for the session was 75.84, 6 pips deep. So this is still key support, guys. I'm very hard pressed. Again, an area that has offered some really strong launches to the upside. Before you start looking for 74 and everyone's calling the RBA is going to cut, they're looking for the 70 handle. First things first. Nothing supersedes basic support and resistance. And for me, even if we get a compelling downside trigger or we get an outside reversal here today, I'd be any type of short exposure, I'd be cleaning up into that 75.90 region. So an interesting position, again, kind of a neutral stance right now to open up the month, but we're going to be looking for that monthly range to finally clear. Last but not least, here's what Kiwi Dollar is doing on the daily. Nothing's changed. Yesterday saw a little bit of a rally here. We failed again ahead of that median line, and here we are trading towards the lows again. Momentum shows no signs of letting up or giving us that topside trigger break. Here's what the intraday chart looks like. And again, that same median line formation, guys, has been in play for nearly 3 months. Spans 3 months, but from mid-April here, all of May, all of June, here we are in July, still holding the same exact median line structure. To start the week, momentum looked like it kind of wanted to make a break to the upside, failed to hold at 60 after a 40 bounce. As soon as we crashed right through 40 again, there's the 60 hold, still looking lower, still looking lower. I was watching this yesterday, and I highlighted this for myself because I said, you know what, if this thing pops into 68.30, that actually might be a nice short. But as you can see, obviously, no luck with any move above 60. So you have to continue to look lower. And am I going to sell Kiwi Dollar at the monthly lows, at multi-year lows? No. Even from a scalping standpoint, yeah, I'd need to get some sort of compelling rally to get me a good entry. So a lot of things on the radar to start off the month, guys. Again, keep nimble as you get into the NFP tomorrow. We'll pick up where we left off. We'll bring up, cover that release live. So I'll open the room a couple of minutes before, guys, just so we can get that release in. But we'll have a shortened session tomorrow, kind of gauge what the market is doing. A couple of things to note. Obviously, it's one of the major prints that the U.S. will release on a monthly basis. Two things I want to just note real quick. A, the Fed's focus right now is on inflation. So barring a extremely weak print or extremely strong print, at expectation, slightly above, slightly below, I don't think you'll see much market volatility. On a really strong print, you're likely to see the dollar find some really good support. Why? Because that means that the Fed is going to be much more likely, will have justification at least to say, you know what, the labor market is in recovery. Okay, we're already targeting, or achieving the natural quote unquote rate of unemployment. Okay, which they see somewhere in the range of 5 to 5.5%. So, um, with what the Fed is looking at, it's unlikely unless we see a big skew on that number that'll have too much volatility. Second of all, it's going to be pretty thin trading conditions here in the U.S. With U.S. markets closed online the next weekend, there's going to be a lot of people who are flushing their out already for the long weekend. So that could actually lead to more volatile trading conditions when liquidity is thin like that. So in the event that you get a big skew in the number, that could exaggerate the spike you get. And again, if it comes in at expectation, slightly higher, slightly lower, with not many market participants on the trade, you might see a little bit more of a muted reaction. So we'll reassess things tomorrow on where the trades are as we head into that print. Again, the expectations are for print of 230,000. Unemployment is expected to downtick by 0.1%. And like I said, we'll be watching that participation rate to see if there's really a shift in the dynamics here. If there are no other questions, we'll wrap things up here. Guys, best of luck trading. Stay nimble. I wouldn't be surprised if I don't get any positions at all today, guys. Again, we'll see how the open looks for the month, for the quarter, and we'll pick things up again tomorrow. Best of luck trading. We'll see you then. Cheers.